I'm Zaki, and today we're unpacking a hot topic on everyone's radar: XRP's bullish push toward the $2.60 mark and how Bitcoin's notorious volatility might just throw a wrench into the rally. But before we dive in, a quick crypto disclaimer. The information shared in today's video is for educational and informational purposes only. Always do your own research and consider your risk tolerance before making any investment decisions. Now let's get into it. Let's start with a snapshot of what's been happening with XRP. Last week, we saw a significant dip to about $1.99, a classic buying opportunity that many investors pounced on. This dip was immediately followed by a surge of around 7.4%, pushing XRP's price upward to approximately $2.38. If you've been tracking the charts, you might have noticed that this dip buying pattern is one that seasoned traders recognize as a strong bullish signal. At the heart of this rally is a MACD bullish crossover that has reinforced the current uptrend, lighting the way toward that crucial resistance level of $2.60. It's as if XRP is signaling, hey, we're only getting started. However, as we'll see, there's more to the story when you consider the broader market dynamics. Now, while XRP is showing signs of strength, it's important to remember that Ripple's flagship asset has always had a complex relationship with Bitcoin. For instance, the XRP/BTC pair has been tracking levels reminiscent of early March, and for now, we're not witnessing any overextension in the market. This tells us that even though XRP is making its own waves, it still largely dances to the tune of Bitcoin's moves. Bitcoin's volatility is like that unpredictable DJ at a party. It can either keep the energy high or abruptly change the vibe. In the current scenario, Bitcoin's short-term pressure remains palpable. And as Bitcoin struggles with its own internal corrections, the ripple effects are bound to influence XRP's trajectory. Essentially, if Bitcoin isn't stable, we could see a retracement in XRP's rally, even if the underlying fundamentals for XRP look robust. Digging deeper into the fundamentals, XRP is standing on solid ground in some key areas. We've seen whales, those big players in the crypto market, at a whopping 150 million XRP in the past 2 days. This significant accumulation, coupled with a trend where investors are shifting funds from Bitcoin to XRP, underscores a strong belief in XRP's long-term potential. However, it's not all smooth sailing. On the flip side, we're also noticing an uptick in sell orders in the perpetual market. While whales are busy buying the dips, there's mounting evidence of weak spot demand. In fact, active addresses have dipped to their lowest since December, and retail distribution is on the rise. This could hint at a scenario where another long squeeze might challenge the heavy hitters, making it even tougher to break through that $2.60 resistance. Let's talk charts. If you're a technical trader like me, you appreciate when price patterns and technical indicators align to give you a clearer picture. Looking at XRP's one-day chart, the price action closely mirrors that of Bitcoin. We've observed two significant dips to around $1.99 within just 3 weeks, coinciding with Bitcoin dipping below $80,000. Interestingly, XRP's recovery post-dip has been stronger than Bitcoin's, which naturally attracts more investor interest. But here's the catch. If Bitcoin faces another drop, especially below critical thresholds like $80,000, XRP could quickly retrace to earlier support levels, potentially revisiting the $2 or even lower mark. One key technical indicator here is the MACD bullish crossover, which still holds promise. But if Bitcoin's momentum doesn't pick up, we might see a temporary stall in XRP's upward momentum. This scenario is further complicated by the fact that short orders on major exchanges like Binance have been dominating the scene. Remember how whales capitalized on the $1.99 dip previously by triggering a short squeeze? Well, history has a habit of repeating itself if the market conditions remain similar. While the technical signals are promising, external market factors cannot be ignored. Bitcoin, as we all know, is a bellwether for the entire crypto market. Its current short-term pressure, seen with those challenging resistance levels, like the critical $85,000 mark, could trigger broader market corrections. If Bitcoin fails to break key thresholds, we could see a domino effect on all coins, including XRP. For instance, if Bitcoin's volatility continues to spike, traders might shift their focus towards profit-taking or adopt a more risk-off approach. This sentiment could exacerbate the selling pressure on XRP, despite its bullish setup. CryptoQuant's recent data indicates that while XRP holds strong fundamentals, the low demand at critical accumulation zones remains a vulnerability. And with major BTC stakeholders still underwater, the overall risk factor remains high. So what does this all mean for XRP's long-term prospects? On one hand, XRP boasts strong fundamentals with clear whale accumulation and an active trading strategy that has outperformed other high-cap assets in dip buying scenarios. On the other hand, the asset is still inextricably linked to Bitcoin's movements. Until XRP can establish itself as a truly independent asset, one that isn't solely tethered to Bitcoin's volatility, we might continue to see these swings and corrections. What's particularly interesting is the interplay between whale accumulation and the increasing retail presence. While institutional players are looking to build significant positions, the rise in retail distribution coupled with a decrease in active addresses signals that the market might soon experience another squeeze. This squeeze could challenge the ability of whales to sustain the rally, making it crucial for XRP to maintain momentum past the $2.60 resistance. Now, let's step back and think about what strategic moves you, as an investor or trader, should consider in this environment. Firstly, it's essential to keep a close eye on Bitcoin. Any significant movement below key levels like $80,000 or failure to break above the $85,000 barrier could be a precursor to a wider market correction. This would likely impact XRP, leading to potential retracements. Secondly, for those actively trading XRP, consider the following. With market volatility on the rise, setting stop-loss orders is crucial. This helps in mitigating risk, especially if the market reverses unexpectedly. Pay attention to exchange reserves and trading volume. A spike in exchange reserves, as we've seen, may indicate rising selling pressure. Keep an eye on the MACD and other momentum indicators. While the MACD bullish crossover is encouraging, it's wise to look at a suite of indicators to gauge the overall market sentiment. In addition, remember that despite the excitement of a rally, crypto markets are inherently volatile. This means that even a promising uptrend can be derailed by external factors. Maintaining a balanced portfolio and avoiding overexposure to any single asset, including XRP, is always a sound strategy. To wrap up, XRP's journey toward the $2.60 resistance level is a fascinating one. The technical indicators, combined with strong whale accumulation and investor reallocation from Bitcoin, set a compelling narrative for a bullish trend. However, the elephant in the room remains Bitcoin's volatility, a factor that could trigger a retracement or even a broader market correction if things go south. So what should you do? Stay informed, keep a close watch on both XRP and Bitcoin's price action, and be ready to adjust your strategy as market dynamics shift. It's a thrilling time to be in the crypto space, and while opportunities abound, being cautious and well-prepared is key. If you found today's analysis helpful, make sure to give this video a thumbs up, share it with fellow crypto enthusiasts, and subscribe to Zaki Crypto Update for more insightful updates and detailed market analyses. And as always, drop your questions and thoughts in the comments below. I love hearing from you. Remember, the crypto market is fast-paced and ever-changing. Stay sharp, stay educated, and most importantly, stay safe in your trading endeavors. Before I sign off, here's a quick reminder. All content provided in this video is for educational purposes only. I am not a financial advisor, and nothing in this video should be taken as investment advice. Always do your own research and consider consulting a financial professional before making any investment decisions. Thank you for tuning in to Zaki Crypto Update. I'm Zaki, and I'll catch you in the next video. Until then, happy trading and stay crypto savvy.